Hey folks, just another kind of random video, just watching the market come apart. The composite went from, up 85, 87, all the way down to minus 45. And I was about to go on Twitter, but I thought I'd just come up and do a quick broadcast. And one of the things that I was thinking is a long-term investment in this market right now is about an hour. And market participants aren't willing to hang on over the weekend. I think we're seeing a little rebound off of the lows now. I've got a chart up here. I'll just bring that up so you can see it. This is a 1 minute graph. This is running a VPM model, actually one that you guys that are users. This is version 2.2, not 1.2 or 3.2, but 2.2, and had a nice short here. And it's interesting because we keep bouncing. Right now we're trading right at that 200-day moving average. Let me bring that up so you can see that. Let's go to the S&P. Take a look at this daily chart here. You'll see we're hovering around here. This thing is setting up as a very negative pattern, and this is on a daily. And PPM1 is trying to rebound a little bit, trying to dissipate some of the downside. It looks like it wants to cross its first derivative, but it's still a minus 0.43. And those of you know what I'm doing here is anything under minus 0.25 is a trend, or plus 0.25. So we are clearly in a downtrend. We came up just above this average earlier this morning. And actually, I was able to get some shorts off when the composite was up about 86. And I've been in and out a couple of times. I've been bouncing around, just day trading. But the bottom line is, we're sitting here testing this thing. I talked about in the commentary and that I did last night. Just the overview is that it was going to be a pivotal day. We traded up a couple levels higher than what I thought we would go to. We actually went, if I go take a look at this, I'll bring it on screen so you can see it. And you'll see that we've got R2 was 2790. That was the number I talked about in the broadcast for last night I did. And then the upper end was 2802.55 basically, right? So we got it right here. And we did trade up all the way to the high was 97.77, so we fell just short of that. And there hasn't been really a solid bid in this market since it hit there earlier this morning. And we're still seeing this thing hover right here. And we got an hour and 45 minutes to go in the day. But I just thought it was sort of interesting what we're seeing happening here. If I go over to a 1 minute graph, you'll see this intraday pattern. And did get a short up here. This is on the cash at 27.78. We go over to the futures. You'll see that there was a sell up here on the futures at 27.80.50. And just looking here, see if we can set up a pattern. Interesting that's coming out of this. And there's Fibonacci projections for a possible bottoming pattern, but there's furthers. This is on a 1 minute graph suggesting 27.54, which is another 13 handles. And the range of volatility that we're in right now is so heightened. I mean, right now we've had a 38-point range, which is right in the sweet spot of where the VPM volatility indicator is saying we were at 45. So we're going to run between 38 45. We could expand this. It looks like you can just see on this 1 minute graph, if you're looking on the screen, should be able to see that. Excuse me. Let me bring that on full screen again. Yeah, you can see here this PPM1 is just shot up here on the 1 minute graph. Go full screen here so we can see a little better. But the PPM 2 and 3 are still in a negative mode. We shot up almost to the 21 period moving average. This is a 1 minute graph. So it looks to me like they're going to try to fulfill this downward objective here. And the key to this pattern is actually just right where we are at 66.50. We just took that out. If we can continue to go down, we're 65.75. We should see a retest of this low. We'll see the PPMs are trying to bottom here. So this is kind of maybe even a little bit of a view of you know what the analysis looks like in a real-time mode. Same rule base that is operating on weekly or daily, weekly, or monthly charts, but you can kind of see this happening real quick. I always talk to people, if you want to learn how to trade the market, look at a 1-minute graph, find a market that trades, has enough liquidity. This happens to be one of the most liquid futures that are out there, so you can get a really good deal. So a couple things. I'll bring up a grease board. This is the way these patterns set up. So what you'll see here is you'll get a pattern. I'll draw some arrows here. You get this, and you can look at it two ways. It's going to come up and rally back into this resistance at the 21 and 40-day moving averages, or I'll take that off, or this is the pattern that you get, and it actually comes down and heads to these levels. So it's going to be, let me erase that. You get the range here of, maybe we'll get a little tick up. If we don't make a new high, then you'll get a move down. And with about an hour and 45 minutes to go, I suspect that some players are getting a bit nervous out there, and you know, so we'll see how this plays out. But I think it's going to play out fairly quick here in the next 4 or 5 minutes. If this bar is going to, if this pattern is going to break down, and if we start to go up the scale a little bit, so let's go to a 3-minute. Hang on, not sure why it won't let me go to 3. It's all grayed out. 3, 5-minute. 1 second here. Let's go back to cash, and we'll go to 3-minute here, and so you can see this pattern that's unfolding here, and you know, same thing, kind of mixed picture on the PPMs, and then we'll head out to a 5. There's no signal right now, but you can see the same pattern setting up, and it's interesting. The volatility is so big on the 5-minute right now. These dots here. In fact, let me just show you this. The dots are, you know, showing 2770 to 2759. That's the range for a 5-minute graph. So my bet is that we'll take out this low of this bar here, which is 2762.89. We take that out. We're about $1.50 off of that. If we take that out, then we'll see the low of the day tested and go on beyond there. Let's go over to the intraday futures and look at the WaveTech scalper screen. You can see this is setting up interesting patterns. So they're definitely trying to bottom here. This is a 1-minute graph again, and I'm going to expand this just so you can see a little more of what this looks like here. I talked a little bit on a trading session I did the other day. As we've got a big trade down here. I haven't traded the futures, but if you look at this liquidity meter, liquidity is just disappearing. You'll see this. I'm going to put it on screen because it's doing. You'll see these bars here. We're seeing it almost black out where liquidity goes away. There's only 40, 50 contracts aside right now. It's impossible. The reason why I haven't traded a lot on the futures today is it's just no liquidity. You get in trouble really quick, especially for doing the type of trading I'm doing. You know, but there's nothing out here. I mean, even when you go 4 and 5 bids or offers out, they're still only 200 by 300, or, you know, there's not a lot out there. These numbers are usually 2 to 3 times what you're seeing right now. I mean, it's just completely illiquid. And not even the machines can play into this game. It's a pretty tough mode. So we are right now 66, a low 62.25 on the futures. Like I said, they're just watching this 1-minute graph here. It looks like there's some things going on. So while we're hanging out together, let's go ahead and go back to this page. You know, there's really not a lot going on here. I'm going to put up, this is a 5-minute chart on yields, but you can see, let me go out just a touch. So as usual, I say there's a couple of people watching, so if you have any comments and you have some questions about something's going on, please ask. Love to hear what you guys are thinking or what you want to know about. But let me go back out here and bring this up to a daily. And you see there's objectives now of 332 to 334 on the interest rates. That's another 20 bips on the upside. If market participants are seriously, if this is what they're worried about is yields going up, well, there you go right there. Here's a new projection off a daily graph suggesting another 20 bips to the upside. I don't see, that this market is going to be able to get out of its own way. And ultimately that the S&P will finally penetrate through the 200-day and get a meaningful decline. Let's talk a little bit about that. Let's go over back to the S&P, take a look at this. Back down, change on a day, but we're hovering along this line. My guess is we see, it's interesting that this projection is for a move. You'll see these dots right here. See if I can make that a little bigger so you can see it. It might be helpful. Those are pretty small dots on the screen, but right down here, you see the numbers, 2632, 26 even, and 2562. Those are new downward Fibonacci projections that came out of yesterday's close. And so we know that 2710 was a low last week, and then I think that will be retested. There's actually a very high probability that that'll be retested. And then the next level down would be this 2632 and even 2610 is a number. Let's just bring that up real quick here. You can see on a weekly basis, we'll kind of review the stuff that I talked about on the Kendall report on Monday. Let me go full screen. What you can see here is the ranges that are being projected are for 28.14.26 was R2. The high this week was 28.16, so it just went a little bit above that. The low S1 was 27.44. Now we didn't get close. We did get to 49 on the low. So we pretty much operate, which is typical S1, R2. So if there was a bias for most of the week to the upside, whether they can, we're bouncing, we're back positive on the session right now. So we're seeing plenty of volatility. And like I said, the close is going to be what it's all about. And a close under the 200-day, especially on a weekly basis, would be pretty significant. Anyway, we'll take a look at, let's go over to the weekly graph just so we can see what's going on there. That is a weekly. Monthly, I wanted to look at that. And I've talked about this several days on lots of broadcasts, but there is a cluster of things going on here. We have 200-day moving average, the 40-week moving average, the 10-month moving average, all of them losing momentum, by the way, which tells you that the vulnerability of a close below these numbers are rising. Now, in the case of the 10-month moving average I have up here right now, PPM is 0.35, and we're still seeing a maintenance. And if you've watched the Kendall report for a while, PPM 3 is at 0.75. And last week we actually printed a 0.59 intra-week last week. So we're rebounding again from that. This 0.70 number I've been talking about for almost 4 years has been the the key number, and we haven't broke that down yet. And I'm still believing that we can, you know, hover along this 10-month moving average for a while. So this may be the lower end of the range, is 27.65, and we may see a spike down, retest 27.10, another rebound, all those kind of things. But there's not a lot of conviction, and that's why I said early on is that a long-term investor right now is about an hour, and it might even be 15 minutes. So there's not a lot of positions going on right now. And I talked also, I think, in a couple of broadcasts I've done this week, is that we're seeing the VPM database, the dailies drop to 12%, the weekly 16%. I haven't seen a 2-week move from roughly 50% of the symbols being in trend mode to only 16%. I don't even think anything like that happened in '08. So the number of patterns have been broken is telling me a lot about the internals of this market. As far as the indices go, they're going to bounce around. There's flows, lots of trade activity around there. But the reality, when you look behind the curtain, I used to have an old buddy on the trading floor when the arbitrageurs come in. He always used to say, do not pay attention to the man behind the curtain, because there's temporary insanity that would happen, and then they'd leave it go away. Well, we're seeing the same thing with the algo traders and the HTF guys. All that stuff is a big element in this market, and they're pushing around. Like I said, looking at the liquidity meter a few minutes ago, there's not very much, that they are, there's not much to key off. There's no liquidity. And I also discussed this several days ago over this week, is that this will continue to plague the market, because when we get these volatility spikes, then liquidity goes away. And that's why you see these big giant swings in the market, because literally it's air pocket after air pocket, downside, upside. You get a little stampede come in, prices move very quickly. And I'll go back over, and we're still here on the S&P. Let's go back to a 1-minute graph. And I'll zoom in a little bit so you can see more of the session. But you can kind of see all these little surges. Let me go just a touch more and see the beginning of the session here. I'm going to take a couple things off just so it'll be easier to see. So you can kind of see surge we had on the open, it ground out, and we've been stair-stepping down, and now we're trying to recover here. But like I said, I think there's some pretty good resistance here. And when we were looking at this chart just a little bit ago, I was talking about it going back up to the 40. Well, this was the pattern that I was talking about. Let me zoom out just a touch. So we were just talking about this and bringing up the whiteboard very quickly. We were talking about how the pattern's going to unfold. Well, we did this pattern, and the question is this what's next? And we get back in, and this is the 200-minute moving average. And I've been probably 4 months now, I've been really studying this thing and looking at, I built a special PPM first derivative. I actually don't have it up here. Let me put it up there. Let's do that. Let's add that in. Let's add a analysis. Here it is, PPM 200. I'll put that on. There we go. So you can see this thing has kind of got a downslope. It's actually got a -% on this. So this, even on a 1-minute chart, you see this roll, and now this has got a downward bias. So we'll see if we do trade up there. So that would be about 6 handles higher on the cash. That'd be up 6 in a day after being up 20. That there's no upside on this market right now. I don't see this thing recovering. Like I said, this may be just a simple ABC. Let's draw that pattern in real quick. I'll go full screen. So I suspect that we could see this thing come down. This is going to be your key level here at the lows of day, 62, 27.62, I think we said the number was. So, and the other thing that could happen is this. Put a couple of these lines back in. That this becomes a trading range, and all you're going to see is this thing do this back and forth. And we'll see how we finish, whether we finish below 27. Let me get that exact number so we know what it is. Going to daily S&P. So the magic number on that 200-day is 68.24. So we're trading right at it. And we'll see how this finishes up. I would like to, if we could finish, what's S1? S1 is 58.35. If we could finish under 58.35, 10 handles lower, the low of the day has been 60.27, so that would mean that the next hour and a half we'll make new lows. It's hard to determine. You're not going to feel anything. I would go to one of my favorite charts to look at, one of the micro trends, 30-minute. You can see here we're starting to roll over on the PPMs again. There's still a downward bias, and my guess is we'll retest that low at 60.27. I said it was 62. It's actually 60.27. The number I talked about on S1 is 58, and matter of fact, daily S1 2758.35. So that's your pivot number. Below that number, then you'll see some things. You'll see them heated up a little bit. We're still holding here, so this pattern's trying to get back up to these levels here. So we had a shot at breaking down. I think, for what it's worth, it's not a conspiracy, but markets participants like to see us stay over that 200-day moving average. We go up, it's going to be interesting, I think, the last hour and a half. So I'm not sure how much longer I want to go. If you guys don't have any questions, a couple of you that are on, then I'll probably just bail. But the patterns are pretty clear. Like I said, if we look at the upside, let's do that just to give you some parameters for the rest of the day, the rest of the session, is these ranges right here. 2778 is a pretty good number. It's about 7 points higher, so we probably stay between 78 and 60, and we'll just figure out at the last bit of the in the last bit of the market whether we're going to take out this 200-day moving average on a closing basis or not. We've done it before on a closing basis. We had a couple of days under, but it's rebounded. But like I said, we look at the action of this week. We've seen it rally all the way up into 29, I think 12 was the high, 28.12 was the high, and now we're back in 27, and we're pretty substantial off that high. And that high was, let me just bring that up. That high was 2 days ago, right? It was 2816.94. So we got up there. Now we pulled back. I don't think anybody wants to own this market right now. And regardless of earnings and all that, I mentioned in the podcast I did last evening, that the talk and the reason why there was a downside yesterday was because there was heightened concerns about interest rates going up. Well, it was funny because the 10-year was down yesterday. And so, the mainstream media needs to come up with some excuse for everything that goes on. I always flash back when I was on the trading floor, and I'd come home and I'd turn on the PBS. I think his name was Paul Kangas, and he would do this little review of the market every day. And what he did is he went to the news line, looked at every top and bottom, and for every peak and valley for the market during the day, he'd look at it lining, and this came out. So he would go, early in the morning, this so-and-so came out and the market went down, but at 2 o'clock, or 10 o'clock, some news came out that said IBM was expecting better earnings, and it rallied up, and he went through and looked at the news line, and he tied this stuff together. And it was funny because I was sitting there right on a major exchange going, I wonder how come we didn't know that. So, there's not any reason for why everything happens every hour. Nobody's really responding to that, and especially in 2018. And I was actually talking to an advisor yesterday, and we were talking about it. So you have to understand, when I started marketing in the 70s and 80s, we owned all of the information. There was no transparency. If you wanted to find out what was going on in the markets, you had to call your broker. And, everything was tight inside. Now with the internet, total transparency, everybody knows everything. There's plenty of blogs and all kinds of things out there that you can get some valid information what's going on in the market. So it from a advisory standpoint and advisors brings in customers and why aren't we doing this and why aren't you doing that stuff? Because they look and it's like, well, if I can see it, you're supposed to be the smart guy. You should be able to achieve it. And it just doesn't work that way. Somebody was telling me, yeah, market was up. Why did we buy back in? Did we do this? Just because the market was up. No, we didn't do that because that's not what we're doing. Anyway, so at this phase, I'm just babbling, no questions. So I'm going to sign out, but I think I set this thing up pretty good how the close is going to look. And like I said, 78 on the upside looks like a top end range for the S&P, and then downside is around 64, 62, with the low being 60, 27, 60, 27. So finish under 60. What did I say? I'll tell you the value. If we finish under 27, 68, 26, then that'll be pretty negative as we come into Monday. Anyway, have a great weekend, guys. We'll see you on Monday's Kendall Report broadcast. Thanks again.